name is Estrellita Garcia-Diaz. I am the CRA officer at Jefferson Bank. Jefferson Bank is a community bank here in San Antonio. Actually, we're based and originated here in San Antonio. We just had our 75th year anniversary last year. We celebrated that in August. We are a small community bank. We're based, like I said, here in San Antonio. We have locations also in Bernie and New Braunfels. I actually have worked for Jefferson Bank for 7 years. And about 6.5 of those 7 years, I worked as a banking center manager for the Goliad location here on the southeast side of town, in addition to the downtown location. So most of my experience has been in the banking centers, boots on the ground with our small businesses, as well as our personal clients. What I'd like to talk about is what banks are looking at when they are looking to finance to bank clients. So bankability. What does a bank want and what do they need from you in order to make you bankable? Meaning, how do we lend to you? What types of products and services do you need? Can we help you with in order to make you efficient, in order to save you some money, some time, and to help you get to the size, the scale, the growth that you're looking for? I always tell my customers that it is very important to have 3 things on your side and to be very familiar with 3 people. That's going to be your banker, number 1, a CPA or a bookkeeper is number 2, and once you get to a certain scale, you want to have an attorney so that they can help you with the legalities of moving forward, growing, and ensuring that you have everything you need. So when I say bankability, typically in lending and credit, there's 5 C's that everybody talks about and that they take a look at. And the first one of those is character. And that doesn't mean so much you personally, although it go a long way if you are if you are personable and you have some drive and motivation to make sure that your business is going to get to where it needs to. But more, I'm talking about your business character. So what that means is, please know what your business is about. Your banker can help you with that as long as you know what it is. Develop a business plan. Ensure that you know what the purpose of your business is. Know your market. Know what your product is going to serve and who it's going to serve. Discuss how you're going to manage your profits and your losses. Do you understand the operations of your industry? All of these things are very important when you are speaking to a banker or to anyone really about who you are as a business owner and what your business is going to do. Another thing that a lot of people don't think about during the business planning stage, that is an exit strategy. While I would love that all of my small business customers who have walked in the door made it successfully for 20 years, realistically, it doesn't happen that way. So it is very smart and wise, and a banker will let you know this, to develop an exit strategy in the event that it is not going the way you planned, or you have to kind of revamp the idea and come back at it in a different way. Second C of credit is capacity. So that's your cash flow. Joe spoke about that in his presentation. Cash flow is very important. That's what they're going to look at when you are trying to get a loan. Can you repay this loan? That's basically what that means. And there's a way to create that. Your banker can also help you with that, as well as a CPA or a bookkeeper. You can do this in many ways. You can pay your bills strategically. If you can hold off on paying certain things till the middle of the month or some month, the beginning of the month, just to make sure that you have a certain amount of cash available throughout the 30 days of the month, then that's something that you can definitely strategize. Use the right payroll cycle. Payroll cycles can get some businesses tripped up. Should you do a 1-month payroll cycle, 2 weeks, every 4 weeks? Something else to think about. So capacity is very important and something that, again, your banker can definitely help you through. And then this is going to be a little bit repetitive because the third C of credit is going to be credit. So you have to start establishing credit somehow, some way. It is difficult, especially if you're a startup, because a lot of times traditional financial institutions don't typically have any types of lending vehicles or products for startups. So there are ways to get around that, to circumvent that. There are organizations out there that are intended for small businesses. You have the SBA that Joe spoke to. Here in San Antonio, we have Lift Fund, and there's a few other organizations just like them to that help small businesses get started and start creating credit cards. Again, Joe mentioned that is probably the fastest and easiest way to start establishing business credit, and make sure that you utilize that in the way that it's intended. It's also very important to understand the types of loans that are out there for you and what they're intended for. For example, lines of credits. Lines of credits are to revolve, meaning you borrow on the line of credit and you pay that off. That way you're constantly revolving that. It's intended for things like inventory that you are going to purchase, sell, and then pay off your line of credit. Term loans are for your larger items, your equipment loans. A lot of times those things get skewed, or those ideas get skewed just because a line of credit is in theoretically, in most cases, is easy to get. It's fast money, it's fast cash. However, if it's utilized incorrectly, that can affect the business credit, and it can also affect the business itself, because if it's not utilized correctly, a bank can call that and term it out, meaning they will cease the line of credit and term that loan out for a year or 2 years or whatever their terms may be, which can cause a strain on the business. So again, things to think about, and also things your banker will definitely counsel you in when going through these steps. I'm on the fourth C of credit, capital. So capital is your skin in the game. It's the money that you have to build your business, to start your business. A lot of times that's not very easy. However, a bank wants to see that you have that capability of funding yourself, funding the business. And when you go apply for a loan, they want to see anywhere between 20 to 30% cash down on any type of loan that you're going to apply for. There's ways to get that kind of capital, or to start building that type of capital. There's grants out there. There are I've seen very creative ways, and have talked to some small business customers who have utilized crowdfunding. They've talked to family and friends who have given them funds, but they do start seeing the necessity to have cash in hand and in your banks. Also, and I don't typically recommend these, but they are out there for some small businesses, and a lot of times it does help them get through the hard times, or through the times where they need to have some cash flow, and it's receivables financing. There's factoring companies out there that can help. Granted, it is at a premium. Also, there's merchant cash advance. Sometimes your cash advance or credit card companies offer the ability to lend against future sales. So those are things that are also available in the event that traditional financing isn't available to you. And then the final C of credit is collateral. While Joe is correct, we don't want your collateral. We really don't. It does help if you do have something available for us to lend against. A lot of times, or at this time currently, with the pandemic hopefully coming to some sort of conclusion, unsecured lending is not very easy to come by. So when we are looking at our small businesses, we ask for some sort of collateral. That can be anything from equipment, consumer goods, farm products, your inventory, accounts receivables, and property, of course. But when you have a banker who you trust and who is knowledgeable, they can serve in very many ways. They can serve as a counselor, they can serve as guidance. However, in addition to that, and a lot of times people don't see us bankers that way, we have connections. We know people within the community. We know other business owners that could perhaps assist you with any needs that you may have, or perhaps collaborations or partnerships that can help both of the businesses grow in some way, or make a solid foundation for both of those businesses. So please just consider looking at who you currently bank with, and ask yourself, is this a relationship that I feel I can grow my business, that will help me grow my business? And do they provide the products or services that I need in order to ensure convenience, savings, and efficiency of what I'm trying to deliver into the community?